you're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand what's the trading setup like and how should you be really looking at strategies for the markets today. Well, it's been 7 days of a winning streak for the benchmarks, the Nifty and the Sensex. Although yesterday we did see the Nifty slipping from its highs, showing some signs of weakness and closed with just minor gains. The Nifty did fail to sustain above the crucial 23,800 mark as well and actually began weaken a little mid to late session as of yesterday. The Nifty mid cap and the small cap indices also had declined by 1.5% respectively, but we've actually seen that the Nifty and the Sensex managed their longest winning streak since September of 2024, but it paired gains after hitting that 3-month high as well. The foreign portfolio investors have actually turned net buyers for the fourth session. They purchased investments worth about 5,371 crores. Domestic institutional investors, however, have turned net sellers, offloading about 2,768 crore rupees worth of stock. Now, when we look at what the global setup is, remember the US features are higher. The contracts for S&P 500, Dow Jones gaining about 0.7% each. The Nasdaq was up by 0.1%. The markets actually still remain on the tenterhooks ahead of Trump's April 2nd reciprocal tariffs news. And there is heightened uncertainty regarding the reciprocal tariffs. On the one hand, there are expectations that there could be some scaling back of the broader tariffs planned to be imposed in India. While on the other side, there is this latest threat from him to impose 25% secondary tariffs on countries like India and China at that import oil from Venezuela as well. So that's really keeping the markets on the edge. Asian markets did see modest gains in the early trading session. The GIFT Nifty also indicating a 50 points of a premium start in the Indian equity markets. Just a moment from now, we will get to know how that shapes up. But let's get to our guest. We have a very special guest joining in. Mr. Gaurang Shah is with us from Georgia Financial Services. Warm welcome to you, sir. Thank you so much for taking the time out. Well, we are on a better footing since the last time that we spoke. The rally was just starting off as of last week, and we've managed about 6-7 sessions of a positive move. How are things really looking to you at this point in time? And do you believe this April 2nd will again prove to be a big dampener for the sentiments or the uptrend that we've been just beginning to see?
Thank you so much, Sakshi, for having me on this platform. Good morning to you and to all the viewers. Well, before I comment on 2nd of April and the impact thereafter, I think, first of all, let us appreciate the fact that the markets have shown tremendous amount of strength in terms of the recovery that we've seen. I'll give you certain dates and levels, Sakshi, so that we can clearly understand how the markets have been so wonderfully firm and recovered. So on 4th of March, correct me if I'm wrong, we were sub 22,000 and we are on 26th of March and we have almost conquered 23,800 yesterday, and then we saw a little bit of profit booking. So in terms of percentage or point wise, both ways and the days, barely about 18 to 20 odd days, minus Saturdays and Sundays and the holidays. I think effectively it was some 16 or 18 days that we recovered this way. So I think it's a phenomenal recovery that we've seen, despite of the fact that we have still headwinds in terms of, like you rightly mentioned, 2nd April. But before that, we'll have to face the F&O expiry, the last one of the financial year and of the month, that will be tomorrow. We may see a little bit of choppiness, volatility today or tomorrow because we've recovered so much, maybe short term, medium term. Traders would want to book profits. Good, healthy, I would say, in terms of market movement. In case we got that yesterday also. So it may be in form of intraday corrections, actually, like we saw yesterday. Today, tomorrow, it may be like that. Then we are back on Friday, first day of the new financial year, first April expiry month. And then on Monday, I believe we have a off on 31st on account of Eid, if I'm not mistaken.
Yes,
so
that's right.
We'll react to it on 2nd April. We come back. I mean, we'll see tariff-related news flows. If you ask me honestly, Sakshi, I think large part of it is already discounted by the market when initially the announcement was made by President Trump. Quantum in terms of how much retaliatory tariff, what are the goods and services, and effectively on which countries will give us a little bit of more clarity. But I remained optimistic sub 22,000 and I remain optimistic at 23,700 where we are right now. And I'll continue to remain optimistic for our markets.
Absolutely. So remain optimistic even at these levels. So, what is the strategy that you're recommending to all the investors? Already there is this, retail investors tend to get in a lot of FOMO. So already in the last week, when the buying suddenly spurted, they felt that they have probably missed the dip. What exactly are you advising them? Have they missed the dip? Have they not missed the dip? How do they really go about finding this bottom that's an ever-going search?
Sakshi, honestly speaking, don't get into the market with the FOMO feeling, because that will be a biggest mistakes or blunder that you would be making. Get into the market with a rational approach, saying that okay, fine, I missed the rally, markets still look attractive, subject to my time horizon is going to be long term. If you're a short term, medium term trader, for the love of God, don't try to be a Robin Hood. This markets, like I mentioned, we have FNO expiry tomorrow. Today, tomorrow, like we've seen yesterday, markets may give you choppy moves. It was volatile yesterday, it may remain volatile not only this week but also coming week, because 2nd of April is uh, the date that President Trump has spoken about. We'll see how it has, but between that, I don't know if you read it or not, Sakshi, but I was reading somewhere America is going to approach a soft stance, flexibility in terms of the tariff that they will be implemented on 2nd of April onwards. So let us see how things evolve. They also realized that the going by the way what they were doing business, it was having a huge negative impact on the American economy as well. It's a known fact actually. So if
Yes.
you are a trader, wait for the clarity to come, possibly next week, onwards, 3rd April onwards, you'll get opportunity. But if you're an investor and if you do get some correction today, tomorrow, day after coming week, then I think again it will be a good time to do a portfolio building exercise, Sakshi.
Absolutely. And Gaurang, you maintained that even before. So even if the tariffs are going to be announced by the US, it's not going to be the other countries only that are going to suffer. That's in fact only also going to be hurting the US economy at large. And we're already seeing some signs of deterioration in the consumer mood, the consumer confidence data that has come in there. What exactly would you foresee looking at the recent data would be the stance that the US Fed would maintain on the rates? Because that was also earlier getting into a question that are we going to stay higher for longer? Will there going to be, only a later part of the new financial year when the rate cuts will happen? How would you really assess that part?
So my heart reaches out to Mr. Powell, honestly, Sakshi. The kind of situation that he has to deal with. I think he's got the most difficult job in the world to do right now. On one hand, he's got President Trump making the kind of announcements that he's making. On the other hand, he's got worries in terms of US economy slowing. We were hearing about recession also. America is going to go into recession.
Yes,
I think
correct.
those talks are now out of the window, right? Soft landing, hard landing, whatever I mean terminology you want to use, but interest rates, I think what he spoke last week, if I'm not mistaken, when the FOMC meet was there, he had a very rational approach that he'll wait and watch. And honestly, I think that's the best thing to do, given the kind of situation and circumstances that the US economy is in. Clarity is still not there. Clarity will emerge in the next maybe about week or fortnight. Impact of that on US, on other economies, on our country, Bharat, India, how it's going to impact. So, okay, I am more optimistic about April rate cut in India, Sakshi, and I'm expecting 25 basis rate cut because of the inflation being so benign, very close, very close or below the comfortable zone. So US Fed will do what US Fed has to do, depending upon how the economy shapes up over there and recession, inflation levels, etc. If you ask me honestly, and I hope I'm right in saying that, we are in a much better situation compared to US. We have rate cuts coming through, we have earnings improvement, we have GDP growth rate, we have inflation within our control. So it's a complex job for Mr. Powell. Let's hope things ease out a little bit over there.
Right. And how about the FIs which have started to take liking for India yet again? Now we have about 4, 5 sessions, and they are now pouring in money. If that if we pencil in what you're penciling in already, that 25 basis points of a rate cut, will that make India more attractive for them?
Well, I will again say what I said some time back, Sakshi. You can hate India, but you cannot ignore India, right?
True.
So. I mean, they're coming. I'm glad they're coming. If they're not coming, I'm glad if they don't come also. But somewhere I think wisdom and fine sense of judgment will tell them that if there is any destination in terms of long-term investment, then it
Yeah.
is going to be India. I was reading one of the articles day before yesterday where one of the advisors to the PMO was mentioning that even if India grows at 6.2,
Yeah.
it is well placed in terms of achieving the third largest economy in some years and the next $1 trillion economy in some time. So
Okay.
and we are doing at 6.4 and we can better. So I mean, they will rethink. I hope wisdom prevails upon them, and they will come. If not now, later. And I mentioned it. Some very savvy manager of one of the funds.
Yeah.
Dugna lagan dena padega. I think it was Mr. Nilesh Shah, if I'm not mistaken. He mentioned that, right? So I agree with him. If you don't come now, then you will have to pay more later on.
Correct, correct. Okay, let's actually look at the Nifty. So it's settled in the pre-open trade at 23,700, 32 points higher, slightly lower than what the Gift Nifty was indicating. The first tick was higher, in fact, but it's now cooled off a bit. So 0.14% of an uptick is what you can understand for is what the implied open is as far as the Gift Nifty trends are concerned. But let's look at some stocks then that you could be looking at today. We have a whole host of news flows, but I want to first get into an understanding of the auto space from you, Mr. Shah, and that's as far as how SML Isuzu is now going to be in focus along with M&M, maybe Ashok Leyland as well, because we are getting to hear there is a board meeting from Ashok Leyland today. There could be an announcement. There is again, question mark as to who will be acquiring the promoter stake in SML Isuzu. Will it be M&M? Will it be Ashok Leyland? What exactly are you really making of these new mergers and acquisitions that could be now in focus as far as the auto pack is concerned, sir?
So these kind of consolidation, possibly we may see a little bit more in the future. We saw happening in the cement sector. We saw recently in insurance sector, which Bajaj Finserv and Allianz news flow. On autos, see, I have no clarity, honestly, Sakshi,
Hmm.
unless and
Hmm.
until the respective company's management comes out and acknowledges the fact that yes, we have signed and sealed the agreement. Till such time, I will not make any forward-looking statements. But
Okay.
there is a caveat disclosure from my side. We have coverage on both M&M as well as Ashok Leyland. SML
Okay.
Isuzu is a small portion for Sumitomo Group, if I'm not mistaken.
Hmm.
And it would be viable for them to come out of this business in case if they're not planning to do any more major capex and give it to the competitor who has more established presence at ground level. So either it goes to Ashok Leyland or it goes to M&M. We are positive on both the companies, but I'll wait for clarity from the management in terms of sign, seal, and deliver.
Okay, let's get into some other stocks as well. Zomato and Swiggy will be again in focus. There's this brokerage firm, Bank of America Securities, that has cut the target prices on both. So Swiggy has received a double downgrade from BofA to an underperform now from an earlier buy recommendation. Their price target has been flashed to 325 from 420 earlier. For Zomato, they had their earlier target price of 300. Now it's slashed to 250, and they have a neutral rating now on Zomato from its earlier rating of buy. Any suggestions here, sir, with the way things are progressing? Why such a change of heart on both these stocks from most of these brokerage firms?
Sakshi, I don't read too much into these firms' reports, to be very honest with you. I
Mm-hmm.
believe in what our team and our belief is. And
Yeah.
on that commitment, let me give again a disclosure. We are maintaining a positive call on Swiggy. I beg your pardon, on
Okay.
Zomato. On Swiggy, we had a subscribed recommendation for the IPO from a long-term point of view. So indirectly, we remain positive on both the companies. But as of now, the fundamental research recommendation is on Zomato. Competition is coming. We all know about that. There is nothing new as to what
Yes.
they are telling us. Whether this new competition coming in will have impact on earnings short to medium term, possible. I don't rule out that. But one has to remember that Swiggy and Zomato are the stalwarts in this quick commerce and they are gaining market share, not to forget that. And in fact, Zomato has invested heavily in some new dark stores, close to 2,000 by end of this calendar year. instead of next calendar year 2026. So they both the companies are taking some right moves, and I hope it will work out better from a long term point of view on earnings front.
Okay. Goldman Sachs has also come out with a report. In fact, they've come out with top 10 stock ideas from India. They have HDFC Bank, AU Small Finance Bank, Titan, Brokerage Consumers, Adani Ports, Indigo, Make My Trip, M&M, Apollo Hospitals, and Power Grid as their top 10 ideas, where they expect up to 23% of an uptake. HDFC Bank, they have a target of what 2090 with a potential upside of 15% from the current levels as well. So, and similarly, you see a lot of target upgrades on all of that. Let's talk about the banking space, Mr. Shah. HDFC Bank, 1825, finally coming out of those 3-4 years of slumber. What's your sense here, sir? And is it the right time to go big, or have we already missed the bus?
Again, you don't go into market with a FOMO or a missing the bus kind of feeling. You get into the market from a long term point of view. And I would like to make a very candid disclosure. I have always maintained advice to our clients that if you have a portfolio in the stock market, then my advice to all of them is that please make sure that financials, that is banking, both public, private, as well as strong NBFCs, should be a dedicated uh, part of your portfolio. Primarily because, Sakshi, I'm of a belief that if India has to become the third largest economy, if India has to become the next $1 trillion economy, financials will play a very crucial and an important role to enable us to reach to those aspirations that we have. And even otherwise, if you look at the earnings, there has been a downtake in gross and net NPA. Provisionings are coming back into the balance sheet. Interest rates cuts are likely to happen. Margins are going to increase. There was an issue with deposit mobilization, but now it has become a thing of the past. CASA ratio is strong. NIMs are improving. I mean, everything is looking quite positive as far as the entire banking sector is concerned. The only request is don't go and buy into weak and smaller names trying to do some bottom fishing or value buying. Stick to the basics, sticks to the large caps and strong performers. Buy quality, don't buy quantity.
What about the NBFC majors, sir, like Bajaj Finance, again coming back on radar of most of the brokerage houses? On Bajaj Finance, there is also this Morgan Stanley report today. They've added that to the ex-Japan and global emerging markets focus list, the clear investments outlook as well. How would you look at that?
Bajaj Finance is one of my top picks in the diversified NBFC category. It is a stock in the last 6 months when the market corrected about 16-18%. If I'm not wrong, Bajaj Finance was one of the large cap NBFC stock which made a new lifetime high. That's the kind of strength this particular stock speaks for itself. And I think everything is going well again over there. As a disclosure, we do have a positive coverage on Bajaj Finance from a long-term point of view.
Okay, got that. The markets have started to take on the positive side for the Nifty 23,681, 12 points of an uptick. Marginal positive is what you see. Let's look at some of the stocks that are opening in trade today. The Nifty Bank also flat with a positive bias at 51,637. That's the kind of move that you're seeing. So flattish. Let's look at the broader markets to see whether that pocket is lending any support to the sentiments in trade. Remember, yesterday, these were the pockets that were dragged down. Mid caps about 0.2% higher. So in tandem with the benchmark indices, the Nifty as of now is what you spot the Nifty Bank at this point in time. The advances, small caps, however, down in trade. Advances are 1,022 to 576 decline. So that's again on a positive note at this point in time as well. Let's look at some of the other names that are going to be important to be seen apart from the banks, HDFC and Bajaj Finance that we've already seen opening in a positive zone. There are a whole host of stocks that you could keep an eye out on today on terms of news. Let's look at Maruti Suzuki. That's going to be important to watch. Again, there has been some tax demand to which it is reacting on a negative note. Wellspun Enterprises, it's awarded 328 crore rupees order. So you can see about a percent move on a higher side on this one. Prism Johnson is another one. It was declared a preferred bidder for limestone blocks. That's also opening on a positive side. IRITA, there has been a raising of 910 crores via Tier 2 bonds at 7.7%. So keep an eye out on that stock as well. Siemens is opening higher. NCLT sanctions on the demerger have been also taken out, and therefore you see about a 2.6% uptake on that one. SIS Limited has approved a buyback of equity shares worth about 150 odd crore rupees. So you do see an uptick on that. It's a mixed trend on the Nifty 50 stocks. You have, about a divided screens between the highs and the lows at this point. You have Power Grid, Bajaj Finserv, Aisha, IndusInd Bank, BEL as the top movers, whereas on the downside, Dr. Reddy's, you have Maruti, Adani Ports, you have Infosys that's on the declining side again. So that's something that we are looking at. Let's look at Zomato. It's opening about 3% lower on the BOFA downgrade that's come in. So that's also reacting negatively to that space. But NCC is higher. There is this BSNL order win of about 10,000 crores that's pulled up the stock higher, about 4% up in trade. So that's the move that we are seeing on large kind of stocks. Mr. Shah, coming to you again. Now I want to understand from you any pockets that you are now incrementally building on positions in, looking at this gradual recovery that we are looking at. Any top 2 or 3 sectors that you have your concentrated focus on, sir?
So I think defense corrected quite a bit and has
Yes.
seen some smart recovery, and defense will be the one that will hog the limelight in terms of earnings, reported earnings for the fourth quarter, and of course for the new financial quarters that we'll witness going into the future. Cap goods engineering is the other one that I feel will do well. Cement, Sakshi, is one sector that not normally people speak about. Cement will be the other one that, so these, of course,
Yes.
we've spoken about financials and autos and all that, but defense, cap goods engineering, and cement, I think these would be the 3 sectors to watch out for.
Any key stock ideas from these particular spaces, sir, that you are preferring over the others?
So, cement, a whole host of names are there, but I think if I can talk about 1 or 2, 3 stocks in cement, then I think Ultratech by default, given the kind of production capacity, Dalmia Bharat in the mid cap universe, Sagar Cement in the small cap universe, defense related, I think BEL, Cochin Shipyard, cap goods engineering. Again, you have a lot of names: L&T, Siemens, ABB, Case International, Cummins, etc. All these look very strong in terms of earnings visibility and order book.
Okay, we'll keep an eye out on this space as well. Let's also talk a bit about the commodity space, Mr. Shah. How are you looking at the oil prices? Again, there is, some stark reduction in the US stockpiles and therefore some uptick on the oil prices yet again. What would you really look at in terms of how should one approach oil and gas story in India, both upstream and downstream?
So I think, if I have to look at the reports by the international agencies on crude oil, and of course the news flow in terms of OPEC plus nations, Sakshi, wherein they have said that they will increase the production. The demand is on the lower scale, production is going up. That itself tells you that crude oil might be headed down south. From $90 plus, we've seen sub $68 on NYMEX, close to $72 on Brent. If I have to go by those reports say that NYMEX could hit sub 65 towards $60, and Brent could head towards closer to $65 a barrel. And that kind of a situation, I think, relatively impact from a long-term point of view would be visible on all exploration oil marketing companies. And India as an economy also, Sakshi, it augurs well, because on one hand you have lower crude oil prices, and on the other hand, from 88 rupees to a dollar, we are close to sub or closer to 85.50 rupees to a dollar. And in credit policy in next week, I believe in first week of April or second week of April, if we have more positive news flows coming in from the RBI, then rupee is likely to gain more strength. In both these situations, I think the positive positive tailwind to growth is very much visible. So
Hmm.
it will augur well for both oil exploration marketing companies.
Fair point. And what's also making headlines in the commodity space, Mr. Shah, is copper, with the prices rallying to newer highs on a day-to-day basis. Does it mean any opportunity in the metal pack for our viewers?
Don't get into metal from a short term, medium term, because seldomly you get positive news flows on the metal pack. I'm talking about the international market. We
Yes.
already have one, overhang in terms of aluminum and steel, 25% certain products duty tariffs in US. On the other hand, you have some positive news flows from China, but when it turns negative, God only knows. And I don't believe anything that comes out of China. As a matter of fact,
Yeah.
I take it with a fist of salt, not with a pinch of salt.
Okay.
So I would say metals do look attractive, but with a 2 year plus kind of time horizon. So we like Hindalco, we like NMDC, we like Tata Steel, JSW
Mm-hmm.
Steel, JSPL, Vedanta, to name a few.
Okay, fair point. Well, on that note, we will thank you, Mr. Shah, for being with us
Thank
in the
you.
morning edition, helping us sift through various news flows and opportunities that are appearing in front of our viewers. Thank you so much. Always appreciate your reviews on the markets for our viewers, sir. Thank you so much.
Thank you so much, Sakshi. Wish you all the best. Thank you.
All right, viewers, we'll continue to look at the markets and the moving parts, and we will soon also introduce another guest who will be back with us to track the technicals for you. 23,716, we're just about 0.2% higher, slowly and gradually moving into a higher space from the opening levels. Let's look at what is buzzing on the D Street as of now. When we look at the key sectors, well, you will be able to see that there are some moving parts into the markets today, and banks, of course, are in focus. We are also seeing just slight gains coming in across the board. When we look at the key sectors, including the broader market, that's also slightly higher in trade. Not too much of a stark momentum that you can spot. Banks and financials just slightly higher again. Among the other sectors, you have autos about 0.4% up, so that's in a thicker zone. IT slight recovery is taking shape, so 0.4% higher as well. Metals about half odd percent higher. Real estate about 0.8% up. You have the pharma and the healthcare also in the green. Media stocks absolutely flat. Consumer durables slightly lower in trade, is what the clear picture is as of now. So, no enthusiasm in terms of key particular sectors as of now, but it's slightly higher, and that's a positive again. Remember, just like how Mrs. Shah pointed out, tomorrow is when we will see the last expiry of the fiscal year and of the month and the series as well, and therefore you actually will see some kind of a volatility there. So brace up for that, but slowly and gradually things might be back on track is what he hopes to see in the markets. Let's also look at some of the broader market cues that we are getting at this point in time. Of course, like I pointed out, the mid and the small caps, but let's look at how the broader markets are taking shape. Let's look at some of the Nifty small cap stocks, how they are really reacting. NCC, like I pointed out, on that order win is clearly important to be looked at. And then you also have Hindustan Copper, IFL. You have Nalco, Tejas Network, Brigade as some of the stocks that are moving in the higher zone. In fact, let's welcome our guest on board. We have Kush Godasara now joining in, market expert with us. Kush, hi, warm welcome. Good to have you with us. Well, you tell us, how are you really assessing the market move over the last 6 days, 7 days, or we did see the market get into a higher band. Will that sustain? Or do you think this was just a bounce and we could again slip back into lower lows? How would you assess the market sentiment?
Good morning and thank you for having me. Definitely, last 7 days has been a dream rally for all investors and traders who are on the long side. But now we have resisted exactly at 23,800, which was acting as a strong support before we had broken down in month of Jan. So I think this next 2 days are very crucial, as you rightly mentioned. It's a financial year and we are seeing some churning because DIA has been selling since last 4 days while FI are buying. So it's little bit confusing data.
Yes.
Definitely, with the levels, we are happy. But if DI, which was our backbone or support since last 8 months, is now selling. So that's a little bit of concern for me. But if we sustain about 23,800 on Nifty, definitely we are seeing some good momentum. But now, we won't get that quick rally because we have already seen around 6-7% rally from the lower side. So stock specific and sector specific, we may get some good trades, but just wait for 2 days. I would suggest, to book profits if you're on the long side, and maybe Friday take a new call.
Okay, fair point. Any stocks that have emerged in front of you today after the opening push? What would you keep an eye out on?
Definitely, my eyes are on auto and FMCG
Okay.
because auto and FMCG are the sector which has underperformed in last 7 days of rally. So M&M, Tata Motors, they that two stocks are on my radar. If Tata Motors sustains above 715, definitely it's a good buy. So eyes on auto and FMCG for a short-term trade.
Okay. Those are the two pockets that you could look at. What about the mid and the small caps after yesterday's drubbing? They are coming back in trade today, supporting the sentiments. How would you play the mid and the small cap story?
Definitely, yesterday we saw a good sell-off in both the indices there. So today we are seeing some pullback, but first 1 hour is crucial for small cap and mid cap. I mean, sustaining in positive territory is crucial. If at
Yeah.
all, sustain on small cap index around 16,200, then we
Hmm.
may take little bit risk on the trading side. But definitely, I would still suggest, at current market situation, if you want to trade on the long side, stay with the blue chips.
Stay with the blue chips at this point in time. Okay, let me bring in one of the blue chip, and that's Bajaj Finance. How would you look at this one, which has been soaring higher? New records being seen on this one. Again, more and more brokerage houses are throwing their weight behind the stock. Today, there's another brokerage firm, Morgan Stanley, that has added the stock to its focus list. Can one still take an entry at the current levels on Bajaj Finance? Is the key question.
No, for Bajaj Finance, maybe my view is a little bit of contra. I would suggest to book
Okay.
profits. Maybe wait for levels to short. The only reason is it has been outperforming. I mean, if you look at the charts from December, Nifty was in a correction, but stock has moved from 6,800 to 9,000. So now as a trader, when you get opportunity in other stocks, people will start booking profit. So if at all, if you bought at around 7,000 also in December, you are making 20% while, Nifty was down. So I think as a short-term trader, now I would believe we will see some profit booking because if you look at the, technically candles of last 5 days of Bajaj Finance, it has closed below the opening prices. So red candles we have seen continuously for 4 days. So, there is some pressure. Of course, we have seen higher highs, but at the level which we open every day, we close below that level. So I am a little bit of worried, and looking at the expiry, we may see long unwinding on Bajaj Finance. So book profits on Bajaj Finance around 8,800, where we have 10 days average, we may enter again.
Okay, fair point. I hope this has also helped our viewers out to get both the views on Bajaj Finance. Gaurang Shah's long-term fundamental view, where he's positive, whereas on the short term, where Kush believes the stock could be, underperforming, and therefore one could look at profit booking at higher levels on Bajaj Finance. Let's look at some of the other key stock ideas. Zomato and Swiggy, I'm bringing that aspect again because brokerage firms have now slashed the targets on both these stocks again, and there is a knee-jerk reaction. There was just a slight recovery in the recent past, and again the stock has slipped around 204 odd levels. Do you think these kind of levels are giving long-term investors on Zomato a time to accumulate at these lower levels, Kush? Or do you think there is something wrong because the prices are not just going to are sustaining at higher levels? How would you read at Zomato?
Definitely, as a disclosure, I have been holding Zomato and have been recommending to my clients. So my clients are also holding from lower levels. But yes,
Mm,
definitely, I have again recommended to my clients just 2 days back that around 180 level, it is a comfortable level for long-term investment. Because Zomato is now it's not just food delivery app. I mean, if you
mm,
look at Blinkit, hypermarket, which is B2B, and now district app. Now we have IPL matches. All the concerts of say maybe recently Honey Singh Tour, Millionaire Tour, all tickets are being through District app. So District app is also catching up fire. I think Zomato has diverted its table booking services to district apps. So I think Zomato is not just the food delivery app. Now you should consider it as a super app. So any correction to 180, it's a good level to accumulate for long term. I mean, for time being, FMCG sector is facing some headwinds, but once at all it picks up, Blinkit is again going to soar new record highs on sales. So I think 180 would be a comfortable level to enter. 160 can be a stop loss.
Okay.
I'm expecting around 450 target for long-term investment. So Zomato is not trading a stock. Definitely, it's in future and options, but please don't trade. Rather, accumulate on every dip for long term.
What about Swiggy?
Swiggy definitely, you can distribute between Zomato and Swiggy, but 60-40. I mean, 60 I will bet on Zomato, 40 on Swiggy because Swiggy is still picking up. But Zomato has that brand value. I mean, if you look at Blinkit, their marketing strategies, differentiation, and district app is a little bit higher age, and also the hypermarket B2B segment. So Swiggy, of course, is doing good with Instamart. But if you have a chat with customers, they always prefer Zomato because now Swiggy had picked up what I feel was because they had a good discounts. But Zomato is not giving discounts now. But people are now looking for services. Gone are the days where we used to look for discounts and switch from app to app. But I think Indian consumers are now growing and back to loyalty. So Zomato has a good loyalty program.
Okay, loyalty pays, and therefore Zomato a better pick than the Swiggy, but you could divide in case you want to have play on both. 60% into Zomato and 40% in Swiggy is what Kush's expectation is as to how should you go about these two key stocks in the quick commerce, food delivery, and beyond kind of spaces as well. Let's look at some of the other pockets then. You were talking about, Kush, the auto pack. I want to understand today there is a lot of momentum in the auto ancillary space, especially the battery makers, Amara Raja as well as Excite. There is a movement there. Would you catch this?
Definitely, for a trading purpose, I will catch this battery stocks, but not for a long-term investment. I think, still long-term, there are many, if we look at discussion with EV stocks, maybe there are some experts believing that, right now EV is catching up fire in auto sector just because, it's cheaper for consumer point of view. But
Hmm.
after 2 or 3 years, we will face the biggest concern, which is battery disposable. So it is
Hmm.
not if feasible, then there might be some concerns. So I think all the premium of EV move has already been discounted. So maybe for short term trade we may buy Amara Raja because it is corrected, but I won't keep these stocks on long term portfolio. So avoid if you are an investor. If you are a trader, if you are making money, 365 can be your trailing asset on X side. Amara Raja, your targets on the upside can be around 5 to 7% from current levels, but not for long term.
Okay, got that. So that's as far as the auto ancillary pack, especially the battery makers are concerned. But any view on, Ashok Leyland, M&M, SML, Isuzu? There could be some news flow there. There is an talk about who is going to be acquiring promoter stake from SML, Isuzu. Will it be Ashok Leyland? Will it be M&M? And this entire space is going to be in focus yet again. Any suggestions? Your top stocks within the trading band?
Definitely, as I said, auto sector looks good to me. I mean, if Nifty has to move, if at all higher levels, auto has supported.
Hmm.
The only concern is Mr. Trump. I mean, what he could, in next week say about auto sector, because we are sure that if we don't allow Tesla with a good terms, indirectly our auto sector is going to be impacted. So I think, for short-term trade, I won't trade the news. Technically, I believe Tata Motors would see better momentum if we sustain above 715. Yes, for long-term investment, I believe M&M can be a stock, but not at current levels. I think we can expect around 7 to 8% correction, with maybe after the news or whatever it would be the reason. But for long-term, M&M is also a good candidate, but wait for some lower levels.
Okay, got that. So that's the view that's coming in as far as the auto pack is concerned. Let's focus on a few other stocks. Banking space today, IndusInd Bank is recovering in trade along with some of the higher private sector banks. Is there any confidence that's returning on IndusInd after the last week's entire news flow that led to a lot of decline on the stock prices. How are you looking at IndusInd Bank?
So from trading perspective, definitely if we sustain about 675, I will go long for a risky momentum play with a stop loss of 645 then. But for investment point of view, I know many investors are trying to accumulate at current levels, but I would sorry, I would suggest to wait and watch because I have seen in past, if you remember Yes Bank or DHFL, once there is some scam in NBFCs or banking, traders, investors, and mutual funds don't come back to this stock. So that is a major concern to me because this is the second time IndusInd Bank in last 8 years has been in such corporate news. So avoid for long-term investment. Don't be in a hurry that you will miss the bus. But if you are a trader, definitely keep 675 as your trigger point. Once it crosses 675, which is 10 days average, we will see a sharp shot coming up to 800. So that can be your trading bet, not for investment.
Okay, fair point. I hope this has helped you out in understanding. Let's look at the broader markets, Kush, mid and small caps. What looks good here? Any key stocks that are standing out, apart from the others?
Definitely, Suzlon was on my radar, but today we are seeing some pressure from the uh, upside. But again, InfoEdge, Naukri.com, which is a parent company of one on Zomato, is looking good. There you can play even some IT bet. Uh, so InfoEdge from mid cap is looking strong with a stop loss of 7,050. One can buy for short term. 7,480, which is 200 average, can be your target. So if you want to play from mid cap, higher mid cap, larger mid cap, Naukri is the stock.
Okay, Naukri is the stock that you could be really looking at this point in time. Let's also look at some of the other pockets then in the markets today. Let's look at, for instance, the recovery. Like you pointed out, the FMCG space. Kush, I wanted to broaden this horizon to also look at the entire consumption basket in terms of consumer durables as well. Remember, last week we started to talk about the summer theme that will just get started very soon. Anything within the consumer durable space that interests you apart from the FMCG space?
Definitely, FMCG space for short term, I won't recommend. I mean, summer thing, if you had to play, the momentum would have started because summer is already, have catched up in at least in the western part extremely. So I don't think this year around we are going to see some summer rally. But if you're a long term investor, definitely I have suggested my clients to, have a higher weightage on SIP of FMCG stocks. So something like Tata India Consumer Fund, which has focus on FMCG, you should hike your SIP levels because now the bottom is nearby, maybe next 2 or 3 months. So difficult to catch the bottom, but I don't think there will be a short-term rally. So avoid trading. High trading should be in high beta sectors like NBFCs or auto. FMCG surely right time to start investing if you have not yet started.
Okay, fair point. I hope this has also helped you out in getting some sense of how to approach these two spaces. Let's also delve a little deeper and to see what's the sense on the metal pack right now, Coach. After the entire volatility that we've seen, there is this again overhang that you also mentioned. What will happen on April 2nd when Mr. Trump really goes ahead with some of the tariffs? He's also talking about secondary tariffs in some of countries like India and China as well. What happens to the metal pack then?
Definitely, metal we see a ripple effect. I mean, if you see any effect on say any tariff on say auto stock, so metal will be affected. Demand will go down for Indian metal companies. So there we might see some correction. Already again, like Hindalco, JSW Steel or metal index overall has seen a good rally from January lower levels. So I think they will outperform. So metal for time being we'll see some consolation to profit booking. So avoid going long for short term. So if you're gone long on JSW Steel or Hindalco, it's right time to book profits in this financial year. Maybe we may see some sideways momentum. So avoid going long for short term.
Yes, okay. Let's look at some of the other pockets as well. Cement space, when we talk about the commodities what's happening here, would you be at all positive on the cement pack push? What looks good here?
Maybe Ambuja Cement is a stock. I mean, of course, it's from the Adani Group, but I think Ambuja Cement should be, watched on. It has been slow and steadily moving higher, higher and higher since last 11 trading sessions. So it's a maybe a tortoise move, but definitely if you want a low beta momentum play with the stop loss of 510, Ambuja Cement can be bought for short term. First target will be 541, above which we may see 580 next 2 to 3 months. So if you are a low beta player, definitely Ambuja Cement can be looked on.
Okay, fair point. I hope this is going to be important for us to all see. Okay, when we're talking about the cement pack, let's also look at the construction. NCC has, rallied about 6% in trade today. This is after securing the 10,805 crore BharatNet orders from BSNL. This is for project in Uttarakhand, Madhya Pradesh, and other regions involving design, construction, maintenance over a 13-year period, and the contracts nearly match the company's market capitalization as well. And the kind of brokerage houses targets that are coming in on this order are like higher by almost 45%, despite the recent 34% drop that we have actually seen. How would you approach an NCC today?
Definitely, if you look at this order, I mean, definitely it's a good order, but it will take time. I mean, of course, it has a timeline, a longer term timeline. So I think I won't play for this momentum play. If you look at the stock price movement, it is lower from the opening price. So as a long term investor, definitely a good news. You can hold on. It's a public sector stock, good dividend. So as an investor, I would buy at current levels, but not as a trader. I believe stock could consolidate between 190 to 220. So now the phase is over. 220 can be a resistance, 190 can be a support. So this 30 rupees range is a range where long-term investors can accumulate. So avoid short-term trading. If at all you have bought, so just book profits because in last 7 days you also in a good rally.
Okay, fair point. I hope this has also helped you out in understanding how do you go about this space as well. We'll just look at some of the other stocks that are buzzing in trade. Let's look at the top, blue chip counters. The Nifty has slipped now and into the red. We have flattened out with a negative bias. IndusInd Bank holds up. Power Grid, Bajaj Finserv, Hindalco, BPCL, Bharti Airtel are the top movers. Whereas on the downside, you see pressure building up on Dr. Reddy's, Trent, Bajaj Auto, NTPC, Maruti, Sriram Finance. The auto space and slight losses that continue on the IT pack. Could you have to say anything on the IT space?
No, maybe IT space. I believe we have seen a good rally maybe yesterday. But again, if you look at stocks like Infosys, HCL Tech, TCS, in just first 30 minutes, they are resisting around 15-day average. I was believe that today we may see a good move above 15-day average, but we have resisted exactly at 15-day average for many blue chip IT stocks like Infosys, TCS, and HCL Tech. So definitely wait and watch for today because on the downside now we have support of 10-day and on the upside we have resistance of 15 days. So technically IT is in some spiral position, so confusing stock. So wait and watch. Don't trade IT for a day or two.
Okay, got that. Hopefully, this has also helped you out in understanding how do you go about this space. Could anything that you would like to suggest on the market level on the Nifty and the Nifty Bank for the day now, since the half an hour is out and we have flattened out and given up the top point. We were recovering slowly and gradually in the first 15 minutes of trade, but in the last 15 minutes, we've kind of given up all of those gains and we are now inching closer to 23,600 now. Will this aggravate for the worse?
I think there are brighter chances of Nifty and Bank Nifty being sideways to negative. The reason is Sakshi, if you look at Bank Nifty chart from 13th March to 26th, so in just span of 10 days, we have rallied almost 8% from the lower levels. I mean, it can't go. Traders would think simply that every day markets can't go higher. So in short term, we have seen a good rally. So there are high chances that we may see some profit booking on Nifty and Bank Nifty. So avoid taking higher leverage positions. Lighten your positions. book 50% profits because now it's a yearly expiry. So I believe if we sustain below 23,600 on Nifty today, then we may see a correction of more 200 to 300 points because we have seen a good rally, almost 8%. So avoid over leverage positions, lighten your position for next 2 days.
Okay, fair point. I hope this has helped you out in understanding how do you approach the markets at this point. Kush, thank you so much for being with
Thank
us in
you.
the morning session, helping us navigate through these wild swings. And viewers, like you all remember, tomorrow is the expiry session, the last expiry of the series and the fiscal year. So it's going to be an important day to really look at. Stay with us throughout the course of the day as we will continue to speak to market experts like Kush to help you really identify the right course of action for you. Thank you so much, Kush. Hope you have a great day. We'll
Thank you.
see you soon back on Business Today. Viewers, we'll get back to you with other shows throughout the course of the day as well. But in case you are in doubts with some of the questions that are coming into your minds, then join me at 12 noon when I come back with daily calls to answer all your stock specific queries, even in this volatile market. Stay tuned with us on Business Today Television.